So hi, I'm Saurav Mukherjee. I'm currently Vice President in Goldman Sachs in New York, United States, and I work as part of the digital transformation in the corporate treasury department here. I am very much delighted to be part of your this discussion this year, and the topic that I'm trying to address. There are two components to it. One is a generic component for all the students, where I will be talking about data literacy, the importance of entrepreneurial mindset, and the importance of decomposing a complex problem into smaller subset. This is a generic aspect. And then I'll be talking about some very specific emerging trends in the financial industry. For example, ESG, which stands for Environment, Sustainability, Governance, open banking, leveraging AI, digital transformation, and financial inclusion. So, so the three important things that I see for any students that they must have understanding, if not mastery, are number one, data literacy. And we hear these days that data is the new oil, new currency, etc. But whenever we make a decision, it is almost subjective, right? And in one of my earlier talks also, I have talked about HIPPO, HIPPO, highest paid person's opinion, and that occurs in organization where there is a limited data driven decisions. Now, by data literacy, I mean that people should have the ability to analyze the data, ability to communicate the outcome of the analysis, like in the form of data visualization, storytelling, and then make some database decision instead of just experience. So data literacy is absolutely important. Entrepreneurial mindset. Now it goes without saying how important it is, and even if you are entrepreneur or not, it doesn't really matter. Even if you are working in a organization, or even if you are a professor, the mindset, entrepreneurial mindset is important. And the third thing is a deconstruction approach, right? Where basically, you will be given a complex problem, and then how can you deconstruct or decompose into smaller subsystem? For example, we call it as MECE, or MECE framework, which is the mutually exclusive but collectively exhaustive uh, problems, right? So for example, somebody, in a banking, we hear, whenever bank gives loan, they have to set some amount of money as a regulatory mandate by the Basel uh, committee. Now that's a bigger, so how much money should I uh, you know set aside? So that's a bigger problem. Now when we look at the problem, we have to say, okay, what does it mean, what does it mean by setting the money apart, right? So say for example, if I'm giving a loan to someone or a company, I have to then compute the probability of default, my exposure at default, and if the default, how much can we recover. Now see how I have now decomposed a complex problem into these smaller three sub problems, and then if we just combine them, we get the how much capital or how much money we should be keeping aside as a bank. So this is an example of a deconstruction approach. So these are three things that I want to talk about. This is a generic thing. Now coming to finance, which I have the exposure, I mean experience of working in financial industry for over 16 years now, and some of the key themes that I see that is emerging. Number one is ESG investing. Now ESG stands for environmental sustainability and governance. Now we might wonder that how environment and environment is and sustainability is becoming important in the finance world. Historically, if we see that companies have focused on governance. So whenever we invest in a company or rate a company, we look at how much, who are there in the audit committee, in the board of directors, who are the whistleblowers, etc. But after the pandemic, we saw that the companies who have invested a lot in the sustainability aspect, the environmental aspect, they have performed way better than companies who haven't. So that's why the ESG investing in a company of who are highly rated in the ESG framework has been very important for any bank. So ESG investing is very important. Second is financial inclusion. How to bring this huge population in the realm of in the realm of banking. services? So that's a very important question that is all the fintechs and all the banks are asking. The third is leveraging AI. Now, goes without saying, right? So AI has tremendous application across all sectors, and banking is also very important. Now, we talk about algorithmic trading, we talk about robo advisor, we talk about fraud, we talk about sanctions. So there are immense use cases for AI. Now, if you even look at the bank of tomorrow, I will give an example. When we talk about a bank of tomorrow, what do I mean? And you will understand how AI and the next topic which I wanted to highlight is open banking. These two are very much interlinked. Now, open banking is a very new concept, right? So for example, you want to apply for a mortgage loan. Historically, what you do is you go to a bank, you apply for your mortgage loan, you provide all your the documents for KYC and all other your financial document. Then they will do a due diligence, they will do your appraisal, and then they will either deny you or approve you. It takes a huge amount of time. It's a hassle for you. You don't know whether you will be approved or not. And it has personally happened to me while I was buying a house here. So what can be done is that, so fintech companies, there are a lot of fintech companies who will basically do something like this. So they will give you, you means the consumer, an interface wherein you can just go and check for all the banks or the financial institutions who are offering mortgage and what rate. And then these companies can also give you a probability of your approval. Now, it's a tremendous thing, right? If, for example, similar thing you see every day and day out when you book your airline ticket. It's exactly same thing. You go to Priceline, Kayak, etc. You compare the different prices. So here in this case, instead of that, you will go to a fintech website. You will see the different banks, and then you can actually select the company where you want to apply, and you can just go ahead and apply. Now, to do this, the fintech company will need access to your data. So that's a very big discussion today, whether we should, that's a question of data privacy and data governance, whether we should give access to fintech to our personal data. And to the bank, obviously it is very important because the moment you apply, your data will be sent to the bank in real time. So the time lag of the approval process, it's very limited. So it's obviously a better customer experience from the bank, and it's a win-win situation for both the consumer and the bank. So that's why there has been so much discussion on this open banking, and it's a really hot topic these days. Now, as I was just saying that this leveraging AI and open banking are extremely important in designing the bank of tomorrow. What do we mean by bank of tomorrow? For example, a bank of for example, if I am buying a car with the use of open banking, right? Or if I, for example, this house example, right? So house, it's not just mortgage, it's also insurance. So the bank, I mean, right now, what I have to do is that I have to go to a separate institution for applying insurance. In the tomorrow's bank, it won't be like that. It will be a consolidated, fintech platform which will give me the access to the bank, which will give me the access to the insurance companies. It will tell me what are the rates. It will tell me when can I, the expected ETA, and then the my probability of getting it approved. So it will be very, very transparent to all the parties. But to do that, now the fifth point, to do all these things, we have to do something called digital transformation in the bank. It's very, very important, and is very uh, contextual, and it's happening. And I see a lot of banks. I have worked earlier in a very big retail bank in the US. Now also I'm working in an investment bank. So I see a lot of focus on business simplification. Now, I have mentioned earlier in some other talks that historically, if you see these banks, they have grown by acquisition, right? So they have acquired a company A in 2005, a company B in 2010, company C in 2015, and that's how they have acquired. As a result, their technology stack has become very complex now, because all these different companies, they communicate differently, they have different process, they have different technology. So when the banks acquire them, now it's become very challenging for the bank. How do they orchestrate the communication? How do we solve it? So they have to do a business simplification. Now, it's a very daunting task. The objective is, you have to first define the process. You have to overlay KPIs, like for example, cycle time or customer call volume, or your risk and your control and your monitoring, etc. So these are very important KPIs in a bank. So how do you overlay these KPIs on the process, and then identify the hotspot, and then do a very data driven business simplification process. You design your aspirational state, you plan your mobilization, and you finally go ahead with the sprints and the design and execution process. Now you must have noticed, I have I'm talking about doing a data driven digital transformation. Again, it comes back to the data literacy. Earlier it was more like, I think we should, this process is important, and therefore go for it. No, you design the process, you overlay the KPIs on the process and identify the red marks of the hotspot, and then go for the digital transformation or business simplification. So that's the approach. Now, one other topic that I think I should mention is that it is not related to digital transformation, but it's tangentially related, and it is something which I have been working right now, and that is digital assets. You Most of you have heard about blockchain, right? Now, and there's a related concept called smart contract. Now, what right now we are focusing on issuing of smart bond. So in a regular bond, or what happens is, we just go ahead, I mean, bank just go ahead issuing the bond, and it will send coupon money to the bond holder. And in the end of the bond period, I mean, maybe 15 years or 30 years bond, they will give the initial amount. That's the objective, the very simple objective of any bond. Now, this is all physical, right? So there is no smart contract in it. What will happen is, in the concept of smart bond, is that companies will issue bond, but then all this coupon, coupon means basically you can consider it to be interest. The interest disbursement, the final amount, maturity amount disbursement, everything will be happening seamlessly back end without any human intervention. And there are multiple parties involved in it, right? Because a bank, I might be working in a bank, say Goldman Sachs or Citibank or whatever. I might be issuing a bond, which is backed by some collateral by, say, some other bank in the Europe, right? So there are multiple parties involved in it. So that's why we need to develop a blockchain network. All these financial players, you can consider them to be a node in that network, and then based on some mutually agreed upon timeline and contract from the very beginning, when those conditions are met, coupon will be sent to the person who is holding the bond. When the time matures, final amount will be disbursed to the person. So everything is happening seamlessly. The problem is that the settlement process has to be defined very clearly, and the most important thing is the litigation. So what happens in case of a dispute, in case of a fraud, right? So the legal implication in this kind of a scenario is very important in smart contract in the blockchain world. So I think these are some of the very important aspects in banking that I see, and I hope that I will have the opportunity to discuss this in greater detail in sometime later this year. It will be fun to connect with all of you, and with that I'll just end. Thank you.